In today's video, we're diving into the exciting world of the Readymix Construction Machinery IPO. With a strong track record and a growing market demand, Readymix aims to leverage this IPO to fuel its expansion and innovation. Join us as we explore the details of this IPO, its potential benefits, and what it means for investors looking to capitalize on the booming construction sector. Readymix Construction Machinery is an engineering-led company that offers integrated solutions for the design, development, fabrication, and installation of various plant and machinery, along with related equipment. The company caters to industries such as cement, concrete, crushing, construction, and building materials. Readymix Construction Machinery specializes in providing comprehensive turnkey solutions that encompass every stage of the process, from initial conceptualization to final installation. Their core business operations include the design and development of advanced machinery, followed by meticulous fabrication, assembly, and rigorous testing to ensure quality and reliability. The company also offers logistics support and oversees the final erection of equipment at customer sites, ensuring a seamless transition from factory to field. In addition to these services, Readymix Construction Machinery is committed to customer satisfaction through robust after-sales support, which includes repair and maintenance services. They provide annual maintenance packages that cover repairs, updates, and scheduled maintenance visits, ensuring that clients' machinery operates at peak performance. Furthermore, the company extends its expertise through business consultancy services, offering innovative design, engineering, and technology solutions. These services are designed to help clients reduce capital costs, improve operational efficiency, enhance plant performance, and increase automation. To further support their clients, Readymix Construction Machinery also offers online assistance for equipment installation and recipe consultancy services, which evaluate the feasibility of various ingredient combinations. The company boasts a diverse product portfolio that encompasses a wide range of plants and machinery, along with related equipment. This includes dry mix mortar plants, support equipment for ready-mix concrete plants, high-capacity silos, artificial sand plants crushers, and wall putty plants. Additionally, they offer service and consultancy, as well as spare parts and scrap. Looking ahead, the company is planning to expand its offerings to include new plants and machinery, such as load cell trading, tank weighing systems, and advanced liquid construction chemicals, further enhancing their comprehensive range of products. The Readymix Construction Machinery IPO is scheduled to take place from February 6, 2025 to February 10, 2025, with a price band set between 121 rupees and 123 rupees prati share. The issue size comprises 30,62,000 shares, aggregating up to 37 crore 66 lakh rupees. The proceeds from the IPO will be utilized for several purposes, including the repayment and/or prepayment of borrowings availed by the company, meeting working capital requirements, and general corporate purposes. The Indian construction equipment market, valued at $7.2 billion in FY 2023, is projected to experience robust growth at a compound annual growth rate (CAGR) of 15% over the next 5 years. In fiscal year 2024, construction equipment sales surged by 26% year-on-year, totaling 135,650 units, and continued to rise in the first quarter of fiscal year 2025 with a 5% increase, reaching 28,902 units. This growth is primarily driven by rapid economic development and a significant uptick in infrastructure development projects, which are creating a heightened demand for construction machinery. Additionally, the Indian government's focus on capital expenditure and the expansion of the manufacturing sector, coupled with increased automation, are further fueling this demand. While the global economy stabilizes, the Indian construction equipment market is demonstrating particularly strong growth, and the anticipated recovery in global trade is expected to bolster further expansion in the machinery sector. Several government initiatives and policies in India are set to positively influence the construction and related sectors, fostering a conducive environment for the construction machinery market. The National Manufacturing Policy aims to elevate manufacturing's share in GDP to 25% by 2025, driving demand for construction equipment. The Production Linked Incentive (PLI) scheme launched in 2022 offers financial incentives to enhance domestic production and reduce imports, benefiting the construction equipment manufacturing industry. Additionally, the government's focus on infrastructure development necessitates substantial use of construction machinery, while the Make in India initiative promotes domestic manufacturing. Collectively, these initiatives create a favorable policy landscape that encourages investment, technological advancement, and growth in the construction machinery sector, positioning it for continued expansion. Readymix Construction Machinery has exhibited impressive financial performance trends over the past 3 fiscal years, characterized by consistent revenue growth, with total income rising from 4,783 lakhs in fiscal year 2022 to 6,984 lakhs in fiscal year 2024. Profitability has significantly improved, as evidenced by a substantial increase in profit after tax, PAT, from 132 lakhs to 928 lakh rupees, alongside a PAT margin that grew from 2.78% to 13.30%. The company's EBITDA also saw a remarkable jump, reflecting enhanced operational profitability. A strategic shift towards higher margin products, particularly dry mix mortar plants and customized projects, has further bolstered profitability, with sales of these products increasing notably. Additionally, consultancy and service income has grown significantly, contributing to improved financial metrics such as return on equity, ROE, and return on capital employed, ROCE, which rose to 65.90% and 48.96%, respectively. The company's net worth has more than doubled, and its debt-equity ratio has improved, indicating a stronger financial position with reduced reliance on debt. Overall, these trends highlight Readymix Construction Machinery Limited's effective capital utilization and enhanced operational efficiency, positioning the company for continued success. Readymix Construction Machinery faces several significant challenges that could affect its future performance. The company is vulnerable to supply chain disruptions due to its reliance on a limited number of key suppliers located primarily in Maharashtra, which poses risks related to price changes and vendor reliability, especially since there are no long-term supply contracts in place. Additionally, customer concentration is a concern, as a substantial portion of revenue comes from a few major clients, and the absence of definitive agreements increases the risk of losing business or facing payment delays. The company's strategic shift towards higher-margin dry mix mortar plants introduces product transition risks, as any decline in sales due to competition or demand fluctuations could adversely impact financial health. Other challenges include dependence on third-party contractors for timely and quality work, and a history of negative operating cash flows. These factors collectively underscore the complexities and risks associated with investing in Readymix Construction Machinery Limited, necessitating careful consideration by potential investors regarding their impact on the company's future performance and investment value. In conclusion, the Readymix Construction Machinery IPO presents a compelling opportunity for investors looking to tap into the growing construction machinery market in India. With a strong track record of revenue growth, improved profitability, and a strategic shift towards higher margin products, the company is well positioned for future success. However, potential investors should also be mindful of the challenges highlighted, including supply chain vulnerabilities, customer concentration risks, and operational dependencies. As you consider this investment, it's essential to weigh both the promising prospects and the inherent risks. Stay informed, do your research, and make an educated decision. Thank you for watching, and don't forget to like, subscribe, and hit the notification bell for more updates on the latest IPOs and market trends.